Hi guys, welcome to the Paper Oligarch channel where we talk about everything finance. 2022 barely started out, but it already shapes up to be a very tumultuous year. I think that the Chinese curse, may you live in interesting times, certainly applies to investing today. The stock market is going down, there is rising inflation, there is also the possibility of war between Russia and Ukraine or China and Taiwan. Also, a certain well-known virus that shall not be named is still lurking around and causing trouble. All of this makes for an interesting backdrop to investing this year. This is why I thought I would share with you how I build my portfolio to give you an idea of how others, namely myself, are preparing for the coming times. Needless to say, this is not investing advice, it's just an example. It doesn't mean it's a right one or a wrong one, and if you take away one idea to explore further, then I'm happy with that. Anyways, without further ado, let's get into it. I call this strategy the, drumroll, portfolio allocation pyramid. Sounds serious, right? The main goal is to split my assets in different classes that reflect different kinds of risks and hopefully help hedge my bets. As Buffett said, rule number 1, don't lose money, and rule number 2, don't forget rule number 1. So, let's begin. The first level of the pyramid, the basis, is of course the almighty cash. I have a certain percentage of my portfolio in cash, split between different currencies like the US dollar, the euro, and the Swiss franc, and since I'm based in Eastern Europe, Romania, I also own the Romanian leu. With rising inflation, this might seem like a bad idea, but I keep a certain percentage in cash, around 20 to 25%, sometimes even more, in order to take advantage of buying opportunities, and of course, this might sound crazy, but I need it in case life happens, like I need it for a medical expense or my car breaks down, and so on. So, I don't have to sell any of the assets that I own just to cover regular, predictable expenses. This is not an optimization of the portfolio allocation by any stretch of the imagination, but allows me to sleep well at night, which is the number one thing for me. No amount of money is worth losing sleep over it, and actually, long term, it also shown to cause underperformance of the portfolio if you are investing while stressed or tired, etc. On a personal note, I am a bit bullish on the Swiss franc because of the fact that the M2 money supply seems to be less of it compared to the euro and the US dollar. Also, the Swiss are pretty serious related to their monetary policies, and thirdly, they are relatively open to crypto. All of which might signal that the Swiss franc should keep its value intact related to other currencies in the future. The counter-argument would be the fact that unlike the US dollar and the euro, the Swiss franc is not a global reserve currency, so it cannot really transfer any of its created inflation to other countries in the way that the others can do. Anyway, sorry for the tangent, let's move on to the second level of the pyramid, which is the commodities level. Here, I have a very small play on gold, both physical and gold miners, specifically G2X and G2XJ, which are very well-known indices. This is the kind of hedge, but the amount is very small, currently only around 2 to 3%, but it should provide me some protection against the hyperinflation scenario if that is to happen. Right now I only own gold, but other commodities like other precious metals like silver, platinum, or the ones used for electric batteries like nickel, cobalt, lithium can also be good hedges. However, I just don't know enough about them, so I don't own any at the moment. One thing I want to mention is that the physical gold is pretty liquid nowadays and you can buy it and sell it relatively easily. I personally believe it would be much more difficult because of things like the authentication of the gold, the safekeeping, and other stuff, but actually there are a lot of companies that make the process pretty easy at a markup of only 1 to 3% above gold market price, which in my opinion is decent. Plus, I have to be honest with you, it is really nice to look at it. The next level of the pyramid is real estate. Again, this is a pretty obvious anti-inflation hedge as well. I won't dwell into this asset too much, even though not all real estate is the same, but it is not really the purpose of this video. However, I usually aim to keep around 25% in real estate. However, right now I'm a bit high at around 32%. As a side note, the percentages I give are an approximation, rounded up or down to the closest integer, since if I buy a property, I don't focus on hitting the exact percentage allocation in my portfolio. Instead, I buy something that I like in the price range that makes sense. Crazy, I know. By the way, if you're interested, this is a picture taken today of my latest investment, a 2-room apartment in Bucharest, which I'm very proud of. Wink wink. Anywho, let's move forward to the fourth level, which is bonds, also known the debt of passion. However, I own both corporate and sovereign bonds. Again, in my case, because I am born in Romania and I live here, is Romanian sovereign bonds. However, I don't own any junk bonds that give up normal returns. This is just something that is enough so I can have a reliable stream of income coming in each year. Even if, in real terms, it is eroded by the inflation, it still feels good to have some money coming in and be able to put it to work. Okay, next, value stocks. We're getting into the more exciting part right now with stocks, but first, I know it's a pain in the ass, but I have to ask. If you enjoyed this video, please like and subscribe. If you do, you can count it as doing the good deed for the day. Anyway, let's get back to the point, specifically value stocks, meaning reliable, dividend producing, boring stocks. I included here indexes both in the US and Romania that I own. I know we can have a discussion if all indexes are value or not. For example, the IT giants overweight in the S&P 500 index makes it very prone to wild swings, but still, I think that overall most of the indexes give you some, albeit not all, of the benefits of value. Mostly, I focused on energy and gas monopolies, and yes, I own the Russian gas giant Gazprom just to be an equal opportunity investor. I also own some utility companies in Romania, among which a nuclear power plant. I also own a company that is the main transportation of goods player in Romania. All these companies have something in common in the fact that they give reliable high dividends. They are monopolies or very dominant players in a market, so they are very unlikely to lose market share or go bankrupt. At the moment, this part of the portfolio consists of about 20% of my total portfolio. The next level is growth stocks. There is a global trend right now in getting out of growth stocks and into value stocks due to increasing interest rates, and my portfolio reflects that fact. Companies that enter in these categories are, of course, the IT companies, the FANGs of the world, the internet infrastructures like microchips, graphical cards, etc., the community habits, or anything that you might call the new economy, meaning anything with a marginal cost of reaching out and serving new customers and that has network effects benefits. Among others, I own the Chinese companies Alibaba and also Prosus, which is best known for owning a 30% stake in Tencent. However, Prosus is also owning a lot of other very promising IT companies, among which are EMAG, which is the Amazon of Romania, and OLX, which is a site where you can buy second-hand goods. Because I am Romanian, I also diversified by owning some of the emerging IT companies from Romania, which usually provide outsourcing or they have some custom software built. The last level of the pyramid is the asymmetric risk return assets layer. Here, of course, we have crypto, options, CFDs, etc. The idea is to place very small bets that have a low probability of winning, but if they win, they would win big. This philosophy is summed best as heads I win, tails I don't lose much. The quote is not mine, it belongs to famed investor Monish Pravai. This is money you are comfortable losing, in my case, 1 to 2% on a bet. Of course, I own the Bitcoin, but also have a lot of, let's call them, short-term bets on my watch list. By the way, I'm thinking of having another video that details my investing process related to an individual bet. So far, I am investing only long. However, I am thinking of doing some more complex / leveraged investments. To recap, here is my full allocation at the moment. You probably noticed that as you go up the pyramid, the risk increases, but also the rewards. My current plan is to reduce my cash and value stocks allocation, which currently cash is at about 25-26% and value stocks at about 20%, and place more bets on the top levels of the pyramid, meaning growth stocks and asymmetric risk-reward assets, since the sentiment for those is very bearish right now, and as the saying goes, the time to buy is when there's blood in the markets. I will post updates after 1 month, 3 months, 6 months, 1 year, etc., or whenever significant changes will happen to the portfolio. If you want to be updated, please don't forget to like and subscribe. It will make my mom really proud. Also, please hit me up in the comments if you have any questions or want me to give more details about a particular investment or investment philosophy that I have. I would also be very interested on how is your portfolio allocation at the moment and if you are happy with it or not. Talk to you later.